It's just Wednesday, but this week has been one of the most brutal weeks in the history of the cryptocurrency industry. We saw the not-so-gradual collapse of Sam Bankman-Fried's entire cryptocurrency empire in less than 48 hours. According to a statement from the American entrepreneur and investor, FTX recorded $6 billion in net withdrawals in 3 days. The former billionaire founder quickly lost his billionaire status, going from $15.6 billion on Monday to $990 million on Tuesday. On Monday, SBF, as he is popularly known, tweeted that a competitor was trying to go after FTX with false rumors. He assured everyone that the exchange and its assets were fine. But less than 24 hours later, he announced that Binance, the competitor supposedly spreading false rumors, had been contacted to buy FTX and clean up the mess. And what a big mess it is. FTT, the native token of FTX, lost over 80% of its value on Tuesday, plunging from $22 on Monday to below $5 and wiping out over $2 billion in a day. Reminiscent of what happened with Terra Luna in May, the bloodbath soon spread to the rest of the cryptocurrency market. Bitcoin, the world's largest cryptocurrency by market cap, recorded a new bear market low of $16,147. Fears that SBF would dump the large amounts of Solana and Solana ecosystem tokens held by his trading firm Alameda Research also had investors rushing to dump the Layer 1 token. As of press time, Solana is no longer a top 10 token by market cap after Polygon and Polkadot flipped it on Tuesday. It recovered briefly early on Wednesday after it gained over 13% and flipped Polkadot to regain the 11th position on the list. But that did not last long. According to reports, more than 18 million staked Solana, worth around $320 million, will hit the market later on Wednesday. Another dump that size could easily put more pressure on the token and drive it further down the list of top cryptocurrencies. In addition, the situation with FTX is not entirely resolved, and several leading industry figures have warned that there might be further downsides. In this video, we are going to examine this situation, beginning with the leaked Alameda balance sheet that started the bloodbath. Please watch the video to the end, hit the like button, and subscribe to the channel. Also, ensure you drop your comments and observations in the comments section below. Thanks and enjoy the video. Last week, CoinDesk published an article about Alameda's leaked balance sheet. The balance sheet showed that the trading firm had $14.6 billion of assets as of June 30. However, much of these assets were the FT token issued by FTX, the key component of the other half of SBF's cryptocurrency empire. According to the article, the firm's biggest asset was $3.66 billion of unlocked FTT. The document also revealed a $2.16 billion pile of FTT collateral, $292 million of locked FTT, and more FTX tokens among its $8 billion worth of liabilities, dominated by a whopping $7.4 billion of loans. The implication is that the trading giant wasn't backed by a fiat currency or another cryptocurrency, but by a token invented by a sister company. The unusual closeness between these two separate entities is again reminiscent of what happened to Luna and USDT earlier in the year. Investors also connected two surprising resignations that occurred earlier in the year. On August 24, former Alameda co-chief executive officer Sam Trabucco announced his resignation on Twitter. Barely a month later, Brett Harrison also announced he was stepping down from his position as the president of FTX. Shortly after that, it was reported that SBF and FTX were being probed by the Texas securities regulator. His buying and bailout spree during the Terra Luna contagion must have caught the attention of U.S. regulators. Plus, SBF was deeply involved in the political scene in the United States. According to Unusual Whales, the 30-year-old had donated nearly $50 million in the midterm election by October 31. But all this together, and it didn't take long for rumors to start flying that the crypto king and his empire were coming down hard. During the weekend, Due9, a technical analyst that had predicted the Terra crash. FTX is insolvent, and we got proof. FTX Exchange and Alameda Research hold $8 billion in FTT value, which is illiquid against a real market cap of $3 billion. That is $5 billion of magic money they report on their balance sheet. Any sell pressure will crash that market cap fast. And that is exactly what happened when Binance moved the remainder of their FTX investment. The 23 million FTT was valued at $583 million at the time. Binance chief executive officer later confirmed the transfer and put out a Twitter thread explaining the situation. Here are his tweets. As part of Binance's exit from FTX equity last year, Binance received roughly $2.1 billion equivalent in cash, BUSD, and FTT. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. We will try to do so in a way that minimizes market impact. Due to market conditions and limited liquidity, we expect this will take a few months to complete. Binance always encourages collaboration between industry players. Regarding any speculation as to whether this is a move against a competitor, it is not. Our industry is in its nascency, and every time a project publicly fails, it hurts every user and every platform. In a follow-up tweet, C's made it clear that we were about to have another Terra-style crash, while also firing some shots at SBF. The tweet reads, "Liquidating our FTT is just post-exit risk management, learning from Luna. We gave support before, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their backs." In a now-deleted tweet, Alameda Chief Executive Officer Carolyn Ellison offered to buy all of Binance's FTT at $22 per token. SBF also stated that the exchange and its assets were fine and had enough to cover all clients' holdings. His tweets have also been deleted. C's finally announced what everyone was expecting on Tuesday when tweeted, "This afternoon, FTX asked for our help. There's a significant liquidity crunch. To protect users, we signed a non-binding LOI intending to fully acquire FTX.com and help cover the liquidity crunch. We will be conducting full due diligence in the coming days. There is a lot to cover, and it will take some time. This is a highly dynamic situation, and we are assessing the situation in real time. Binance had the discretion to pull out from the deal any time. We expect FTT to be highly volatile in the coming days as things develop." SBF also confirmed the agreement in a Twitter thread. A part of his thread reads, "Our teams are working on clearing out the withdrawal backlog as is. This will clear out liquidity crunches. All assets will be covered. This is one of the main reasons we've asked Binance to come in. It may take a bit to settle, etc. We apologize for that. A huge thank you to C's, Binance, and all of our supporters. This is a user-centric development that benefits the entire industry. Steez has done and will continue to do an incredible job of building out the global crypto ecosystem and creating a freer economic world. As expected, the crypto market has been extremely volatile due to the near collapse of one of the world's largest crypto exchanges. Bitcoin, the world's largest cryptocurrency by market cap, recorded a new bear market low of $16,147. Ether has lost over 17% in the past 24 hours and is now exchanging hands at $1,200. All the top cryptocurrencies are still taking hits, but Solana is taking the worst hit. The overall crypto market cap is also down to $871 billion, according to data from CoinMarketCap. Amid the intense bloodbath, the top 10 cryptocurrency exchanges have recorded a massive increase in trading volumes. On Tuesday, the top 5 exchanges recorded over $60 billion in trading volume. As investors scrambled to avoid the crash, top exchanges saw an increase between 126% to 305% on Tuesday alone. Coinbase and Kraken also reported connectivity problems due to the chaos. No less than 6 cryptocurrency exchanges have also announced plans to publicly publish their fund reserves to alleviate concerns about their liquidity base and reserves. Sometime within the next 30 days, Binance, Gate.io, KuCoin, Poloniex, BitGet, and OKX are expected to publish their Merkle Tree Reserve certificates to increase transparency. Several industry leaders have reacted to the situation and its impact on the rest of the crypto markets. On Tuesday, Binance CEO tweeted, "2 big lessons. Never use a token you created as collateral. Don't borrow if you run a crypto business. Don't use capital efficiently. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt." Real Vision co-founder and chief executive officer Raoul Pal also tweeted, "The issue is here not the FTX situation, but the Alameda unwind, and there is an even larger liquidity cascade to come. We just can't tell. Be very careful. Most hedge funds, etc., are still sitting on a lot of cash, but it's the opaque trading shops where issues can still lie." Anonymous independent Bitcoin analyst Plan also tweeted, "Second capitulation event, first Luna, now FTX. Just like the 2015 double bottom, first Bitstamp hack, then XT fork." But the question everyone is asking is, what comes next? Will C's and Binance be able to go through with the deal and save the day? Can the exchange cough up enough bailout money without getting drained down the line like SBF and FTX? And most importantly, what happens to other exchanges, trading firms, and others crypto firms that were significantly exposed to FTX and Alameda? Let us know what you think about the near collapse and its aftermath in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more videos on the crypto market. Thanks for watching.